Following more than a year of instability brought on by the pandemic and low oil demand, Saudi Arabia is currently witnessing a boom in oil exports. A General Authority for Statistics, GASTAT, study states that Saudi Arabia's oil exports surged by 75% year-over-year in March, totaling about $14 billion. Crude oil makes up 70% of the nation's total export earnings. The world's top oil exporter suffered greatly as a result of low demand, which drove down oil prices. Exports fell precipitously throughout 2023. Nonetheless, since late last year, when oil prices started to level off and pandemic restrictions loosened, the nation's oil sector has been expanding. March saw a 43% increase in non-oil exports to $5.96 billion, the biggest amount since July 2021. The primary products exported were medical devices, watches and clocks, rubber and plastics, automobiles, airplanes, ships, and related transportation machinery. Next week, Saudi Arabia and Russia will head OPEC Plus to discuss raising oil output after a tight production quota earlier in the year and the possible effects of an Iran nuclear deal on production levels. As Strategic Energy and Economic Research President Michael Lynch put it, the overall mood in the market is moderately bullish. Furthermore, the demand recovery is continuing to shape up, so people are looking at a stabilized market for the near term, but that puts a cap on things with Iranian supply coming back. Even if Iranian output grows with the lifting of U.S. sanctions, traders are optimistic about an increase in oil demand throughout the summer months due to the effectiveness of vaccination campaigns in the U.S. and Europe. The 840,000 barrel per day rise scheduled for July is anticipated to be approved by OPEC Plus on June 1st. This will conclude the 3 rounds of output increases this year, with the goal of recovering 2 million barrels by the summer to keep up with the growth in demand. Forecasts are predicated on the upward trend in both oil prices and demand, with Brent expected to close at a 2-year high. From $66.85 on Monday to $69.69 this Friday, the price of Brent has risen gradually, heading towards $70 a barrel. Buoyed by strong economic data and risk appetite among investors on the financial markets, Brent is making a renewed bid for the psychologically significant $70 per barrel mark, said Commerzbank analyst Eugene Weinberg. Additionally, Weinberg feels that the demand drop forecast related to the COVID-19 pandemic has been exaggerated, saying that pandemic-related concerns about demand are giving way to optimism in view of the rapid return of consumers. Oil demand is expected to return to 100 million barrels per day in the third quarter of 2024 as more people travel and the constraints associated with the epidemic continue to be lifted. The demand for gasoline has already increased this year and is predicted to climb more as those who have recently received vaccinations look to evade national limits and go back on the roadways to resume their regular lives. In the nation that imports the most oil, President Biden's American Job Plan also seems to be contributing to the stabilization of oil consumption. After a year of stagnation, lower unemployment has given people more disposable income and the incentive to commute. With a dramatic recovery in demand anticipated for the summer, OPEC Plus is expected to continue relaxing its quotas in order to resume higher production activity among its member states and allies, as Saudi Arabia announces record levels of oil exports. According to 2 OPEC Plus sources who spoke to Reuters, the Joint Technical Committee, JTC, of the OPEC Plus group maintained in a meeting on Monday its forecast for growth in global oil demand this year at about 6 million barrels per day, BPD. The committee convenes in advance of the OPEC Plus alliance's monthly ministerial meetings to assess market conditions, stock levels, and compliance rates. When requested, the committee provides suggestions for policy measures to be taken by the ministers at their meetings the following day. OPEC itself stated in its June monthly oil market report that, notwithstanding the COVID problem in India, it was optimistic that expanding fuel demand and quickening immunization programs will enhance world oil demand by 5.95 million barrels per day this year. It maintained its June demand prediction. The Joint Ministerial Monitoring Committee, JMMC, meeting is set for Tuesday, August 1st, and is preceded by the JTC meeting. OPEC Plus representatives and 24 analysts told Bloomberg News last week that the organization is expected to affirm tomorrow's meeting that it will reduce the oil output curbs by the scheduled 840,000 BPD in July. This is in line with the May to July plan. Despite this year's history of decisions surprising both the bullish and pessimistic sides of the market, no surprises are anticipated at this time. The combined oil production of OPEC Plus is expected to increase by 350,000 barrels per day in June and July, and by over 400,000 barrels per day in August. Furthermore, over the course of the upcoming few months, Saudi Arabia is lowering its extra unilateral reduction of 1 million barrels per day, starting with monthly production rises of 250,000 barrels per day in June and July. By August, OPEC Plus is predicted to re-enter the market at a rate of up to 2.1 million barrels per day. The decision made in early May indicated the OPEC Plus alliance leaders' confidence that the market could handle such a large supply given the acceleration of vaccination campaigns and the rise in travel. By the conclusion of this year's fourth quarter, OPEC Plus and all analysts anticipate that global oil consumption will have recovered significantly in the second half of 2024 and will be almost back to pre-crisis levels. According to sources at OPEC spoke to Energy Intelligence this week, OPEC has had to remind the non-compliant parties in the OPEC Plus oil output agreement once more to submit plans detailing how they will make up for pumping more than their allotted amounts in recent months. Since the most recent agreement went into effect on May 1st of last year, 10 countries in the OPEC Plus alliance have overproduced in excess of what has been permitted. According to sources who spoke with Energy Intelligence, 7 of the 10 producers have not yet submitted plans to the OPEC Secretariat detailing how they intend to make up for exceeding their quotas. All nations stressed the importance of accelerating the market rebalancing efforts without delay and pledged to achieve full compliance and make up for previous adjustment shortfalls during the extended compensation period, which runs through the end of September 2024, according to a statement made by the OPEC Plus ministers at their most recent meeting at the end of May. But certain nations have yet to achieve the minimum expectation of 100% conformity and to compensate for overproduced volumes, according to OPEC, which was mentioned by the ministers. OPEC sources told Energy Intelligence that while Iraq, Equatorial Guinea, and Gabon have submitted plans for compensation schedules, the other laggards, Russia, Congo, Azerbaijan, Brunei, Kazakhstan, Sudan, and South Sudan, have not. Energy Intelligence believes that in the year following the implementation of the OPEC Plus agreement, non-OPEC countries produced slightly more than 180,000 BPD over their combined quotas, while OPEC members overproduced by 120,000 BPD. Russia is thought to have been the OPEC Plus member that overproduced the most between June 1, 2023, and May 30, 2024, averaging 80,000 barrels per day above its limit for the year that ended in May. Energy Intelligence's sources indicate that Russia considers compliance rates of 95 to 96% to be sufficient. Saudi Arabia, the other major OPEC Plus ally, has begun to acknowledge that Moscow's continued strong backing and participation in the production cut agreement may come at the cost of complete Russian non-compliance.